Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Very good morning. Today will be Tuesday, the 22nd of April, 2025. So as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation of any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the intraday technical outlook on the various broad-based cross-asset classes, i.e. the major dollar pair, the major stock indices, and the two key commodities that we cover on a daily basis, which is gold XAU/USD and as well as the West Texas crude oil. Let's have a recap what has taken shape yesterday in terms of economic data release, news flow, and as well as the intraday movement on these broad-based cross-asset classes. So let us start with the economic data release first over here. So yesterday, I would say it's still considered as Easter Monday. So the major US, the major US stock indices are open, but however, the European markets are closed. So a rather quiet market yesterday on the aggregate. But however, markets are still moving, especially during the US session, given that they are still open. So what I could see over here is that yesterday's key economic data was this conference board leading index. So this conference board's leading index is something like a tier 1 economic data in the US, where they attempt to actually use leading economic indicators pertaining to the health of the US economy, and they aggregate it according into an index. So it tends to actually lead by 3 to 6 months according to the research by conference board. So this latest conference board leading index on a month-on-month basis for the month of March continues to deteriorate on the negative side of the story. So market is expecting a lower level of negative 0.5, but it came in much more worse than expected, negative 0.7, and also way below the previous month of February print of 0.2. So net overall, this conference board leading index is pointing to a further deterioration in US economic growth. Not pretty surprising because the fact of this ongoing uncertainties regarding about this implementation of the US trade tariffs according to different kind of brackets, and also the risk of tit for tat measures by other countries hitting back into US. All right, given the current hawkish White House administration stance in implementing this US trade tariffs policy. So with this deterioration in this conference board leading index data, that led to a further negative feedback loop in the US stock market after they reopened from their last Friday, Good Friday public holiday break. So the S&P 500, the Nasdaq 100, the Dow Jones, the Russell 2000, all four of them are deeply in the red, and they actually closed negative 2% or more yesterday. And what's interesting over here is that after hitting the 3 a.m. mark Singapore time, there was a minor bounce that's being seen on the S&P 500. Similarly in the Nasdaq 100 as well at the 3 a.m. mark Singapore time. That means the last 1 hour we'll be able to see a bounce, a relief bounce that takes shape in the major US stock indices. So this bounce that took shape in the major US stock indices is because the several hourly momentum indicator as being expressed in this major, as being depicted in the major US stock indices hit oversold region. So later I'll share with you what do I mean when I cover the intraday technical outlook on the S&P 500 CFD index and as well as the US Wall Street CFD index, because of it hitting the extreme oversold region on the hourly basis. That actually kind of attracted profit taking for the short sellers and potentially lead to this relief rebound that is being seen in the last hour of yesterday US session. That means between Singapore time 3 a.m. to 4 a.m. mark. And because of this relief rebound that's being seen in yesterday's late US session, the last hour US session, that led to the Asia session rebound continue, where the Nasdaq futures and the S&P 500 E-mini futures and the Nasdaq 100 E-mini futures, both of them extending their gain in Asia session to 0.6% each as we are speaking right now. All right, and also due to this bounce in the major stock indices over here, due to this bounce that's being seen in the E-mini futures, that means the S&P 500 and the Nasdaq 100 E-mini futures, the US dollar managed to actually stage a bounce. Okay, so this is the 5-day rolling performance of the US dollar as we are speaking. So they managed to actually stage a rebound as well over here, a bounce, all right, as you could see. But however, this bounce is rather lackluster, as what we are speaking right now, the dollar strength continues to actually decline. So based on the 5-day rolling performance, right now as we are speaking, it's a 5-day rolling performance. Let me do it again. The weakest dollar pair is actually against the dollar is actually the weakest against the euro and against the yen right now. So the dollar is weakening by negative 2.15% against the euro and weakening against the yen by negative 2%. So as the dollar yen right now is hitting close to a low that is last seen in September and is fast approaching the 140 psychological level. So why the dollar yen is so weak at this juncture, also reinforced by a particular news flow as reported by Reuters. So Reuters reported that according to a source that is pretty close to the Bank of Japan, and this source highlighted to Reuters that Bank of Japan is likely to keep rate hike signal intact despite despite the ongoing Trump tariff risk. So what it means that we know that the Bank of Japan will conclude its up and coming 2-day monetary policy meeting ending in 1st of March. Okay, so there will be a 2-day monetary policy meeting soon in by Bank of Japan, 30th of April to 1st of March. And this source stating that Bank of Japan is likely to maintain its forecast of rising wages and inflation according to the sources over here. But the source also warned that it may cut growth forecast. So by maintaining rising wages and inflation, that actually kept Bank of Japan slow gradual increase slow gradual increase a slow gradual interest rate hike stance intact. All right, so that actually is actually signaling to the market that it's still on a pace of a very slow gradual interest rate hike rather than the start of an interest rate cut cycle again in Japan. All right, according to this source as reported by Reuters. So that also explain why the dollar yen is actually plunging right now as we are speaking. All right, so later I'll touch on the technical outlook on the dollar yen. What are the key levels to watch out for? All right, so with the Hong Kong stock market back in action after a 2-day Easter break, so the Hang Seng Index is actually now down marginally by negative 0.10%. The higher beta Hang Seng Tech Index, which comprises of the China big tech stocks, is down much more at negative 0.7%. So later, as usual, I'll touch on what are the key levels to look out for when I cover the intraday analysis on the Hong Kong 33 representing the Hang Seng Index. So the Nikkei 225 is almost unchanged right now as you're speaking, down negative 0.07%. So the reason why the Nikkei 225 is rather lackluster right now, because after the first round of US-Japan trade negotiation talks concluded last week, the Japanese Prime Minister Ishiba reported to the parliament yesterday, stating that Japan won't just keep conceding to US tariff talks, especially they are trying to protect the automobiles and agriculture sector in Japan. All right, so saying that Japan won't concede to all US demands in trade talk, stating the needs to protect national interests. So the upcoming second round of trade talks between US and Japanese officials will be held before April and the exact date is not known yet, but based on the remarks that's being made by PM Ishida in Japanese parliament yesterday, the second round of trade talks between US and Japanese officials that's to be held before this month end is not going to be quite smooth sailing. All right, so that also explains why the Nikkei 225 right now is trading at a lackluster pace. All right, over here. So and also given that yesterday's rather weak conference board leading index of the US economy plunging further to negative 0.7% month-on-month in March. That also kind of altered the future interest rate cut expectation as being modeled by the CME Fed Watch 2 according to the latest data in the short-term Fed funds interest rate futures market. So on the upcoming 7th of May meeting, market participant in the Fed funds short-term interest rate futures market is almost expecting 100% no change by the Fed to maintain that a probability of 91%, maintaining the Fed funds rate at 4.25% to 4.5%. So that is the current rate at the moment. Only a small percentage of 9% probability expecting a 25 basis point cut. But if you stretch out according to the calendar based on the aggregate probability, so based on the aggregate probability, market participants in the Fed funds interest rate futures market expecting a rather high probability or high chance of 78% that the Fed may cut in the next meeting in 18th of June. So the first potential rate cut may come in 18th of June FOMC meeting, bringing the Fed funds rate to 4% to 4.25%. And if you look at by the end of the year, that means end of the year will be the last meeting is 10th of December 2025, the last meeting the last meeting by the Fed. Market participants is expecting a high odds of more than 50%, 68% chance that the Fed funds rate will be at 3.25% to 3.5% upper limit. So taking into accordance of 4.25% minus 3.25%, so that is implied 1 percentage point of interest cut. And if the Fed were to move by 25 basis point each, it means a cut by 0.25%. That means what market participants is pricing in right now is potentially 4 interest rate cut of 0.25 each before 2025 ends, according to the latest pricing data by the CME Fed Watch 2 based on market participants in the short-term Fed funds interest rate futures market. So that is, to me, that seems to be rather over optimistic in terms of the dovish side of the story. Still recall that the key Federal Reserve officials, including their boss, Fed Chair Powell, they are much more unreluctant to actually cut interest rate at this juncture, and they are adopting a wait and see approach. And their stance, they are more concerned about sticky inflation rather than economic growth weakness that's being inflicted by this ongoing erratic and as well as sometimes aggressive way of US trade tariffs policy implementation by the US White House administration. So something to look out for based on the way the CME Fed Watch 2 will change in the coming weeks when new data starts to come in, and as well as new policy guidance by the US Federal Reserve officials, something to look out for over here. So to me, right now, the CME Fed Watch 2 is indicating 4 interest rate cut of 25 basis point each before 2025 ends. And to me, that sounds that a bit aggressive on the dovish side of the story. All right, so with that, let's sum up the first session of today's Daily Dose of Market Insights. Now, let me cover the second session, which is the intraday technical outlook on those broad-based cross asset classes, starting with the FX market. So as usual, I will expand my screen. All right, so let us start with the FX market first. Okay, starting with the euro dollar. Right, great. So this will be the chart of the, let me adjust. Okay, sorry, this is the monthly chart. This will be the daily chart of the euro dollar. So if you look at the daily chart of the euro dollar, price action continues to shape that major price action continues to be bullish after that major bullish breakout that is being seen on the 11th of April over here. Pardon me. Yeah, 10th of April. Yeah, to be precise, 10th of April, breaking above the former long-term circular descending channel resistance from July 2008 high. This is the light dotted turquoise green line. And based on current, yesterday, it actually printed a high, an intraday high of this 115.73. Okay, let me put it 115.73. Okay, so this 115.73 is the highest level on the euro dollar that was last seen over here in November 2021. All right, so that's close to about 3.5 year high. All right, at this juncture. So given that price action continues to extend its gains, so right now as we are speaking, the euro dollar is extending its gains in the Asia session by 0.2%. So what are the key levels to watch on the intraday basis for today? So we'll be looking on the hourly chart instead, all right, rather than the daily chart. So with that over here, the hourly RSI continues to be bullish over here. So what I could see is now bouncing off a parallel trend line ascending support level right at the 50 level mark. All right, right at the 50 level mark. Oops. On the hourly RSI. Okay, so this is the hourly RSI. So indicating that the short-term bullish momentum remains intact for the euro dollar based on the latest observation that I highlighted for you guys on the hourly RSI of the euro dollar. So first near-term support level to watch out for today as we head into a European session thereafter in a 4-hour time, in about 3 to 4 hour time. The first support level to watch will be today's Asia session low that managed to pull back and survive it during the start of the US session at this 114.80. So 114.80 was yesterday's US session low. In today's Asia session, there was a sell-off, but managed to survive after trading a positive follow through by 2 hourly bullish candle as we are seeing it right now over here. Right, if you look at my screen, so that will be my first support level to watch, 114.80, but I will not use 114.80 as my short-term pivotal support. Just in case of any whipsaw, I'll use a lower level, which is much more important because formerly it formed a minor basing formation during 14th of April and 17th of April, 3 days of minor basing formation before it shaped that bullish up move on yesterday's Asia session. So this will be a key pullback support on the very short term at 114 figure level. So using a Titan 114 figure level, short term pivotal support level to maintain today's intraday trend bullish bias above 115.80 short-term resistance level, which I highlighted yesterday, may expose the next intermediate resistance at 11660/11690. Above it may see 11720, which is the 0.618 Fibo extension taken from the low of 27th of March. Only an hourly close and a breakdown below 114 adjusted short-term pivotal support for today will invalidate today's intraday trend bullish bias to expose the next near-term support level, kicking start a minor corrective decline sequence. 113.40, below it may see 112.70 next, which is the minor swing low area of 11th of April and 16th of April. So overall, in a nutshell, technical element still remains positive on the euro dollar on its hourly chart. So we will still maintain its short-term intraday trend bullish bias as long as adjusted Titan 114 short-term pivotal support holds for today on the euro dollar. Up next will be the sterling dollar. So the sterling dollar continues to expand as well on the upside, as you could see in today's Asia session, extending it gains to 0.17% right now. And also interestingly, it managed to find support at yesterday's US session low, which is at 133.60. So this will be my first support level to watch out for as we head into the European session thereafter today at 133.60, but I do not use it so tight as my pivotal support. I'll use the former minor basing formation that is being formed on 16th of April to 18th of April before that bullish breakout that's been seen in yesterday's Asia session that led to a rather steep rally. So this will be a rather important inflection point or pullback level for the bulls to watch out at 132.90. So 132.90 will be my Titan short-term pivotal support for today to maintain the sterling dollar intraday trend bullish bias. Above 134.35, which is my resistance that we highlighted yesterday, may expose the next intermediate resistance at 134.80 and a breakout above 134.80 may see 135.50/35.80 next, which is a 1.236 Fibo extension taken from the low of 8th of April, and also 0.764 Fibo extension taken from that previous minor swing, previous low all the way down from 13th of Jan. So it's a Fibo extension clustering level that coincides with the 135.80. All right. However, a sudden swift move down with a hourly close and a breakdown below 132.90 tighten short-term pivotal resistance, a pivotal support for today will invalidate today's intraday bullish trend, intraday trend bullish bias to kickstart a potential minor corrective mean reversion decline sequence, exposing the next near-term support level at 132.05, which is the minor swing low of 17th of April and 16th of April. A breakdown below it will expose 131.20 next, which is the minor congestion area of 11th of April and 14th of April. So i.e., let me summarize. Given that the technical elements remains positive on the sterling dollar, with the hourly RSI bouncing off from its parallel ascending trend line support, okay, right above the 50 level, indicating that short-term bullish momentum remains intact for the sterling dollar. We will maintain sterling dollar short-term intraday trend bullish bias as long as today's adjusted higher short-term pivotal support at 1.3290 holds. So that's for the sterling dollar. Next up will be the Aussie dollar. Still recall Aussie dollar yesterday we flipped to a neutrality stance between 64 figure and 63.35. So 64 figure is a rather important level. Yesterday it do have a daily close above it. So what we could see over here very clearly is a daily bullish breakout above the short-term pivotal, the 64 medium-term pivotal resistance. So given the bullish breakout of this 64 medium-term pivotal resistance with a daily close above it, that potentially reinforce further potential upside that may be in store for the Aussie dollar due to an important technical bullish breakout of the 64 medium-term pivotal resistance with a daily close above it over here. So this is the daily chart of the Aussie dollar. So with that, on the hourly time frame on the Aussie dollar, we will flip to a intraday bullish bias on the Aussie dollar, also supported by a positive reading on the hourly RSI, holding above its parallel ascending trend line above the 50 level mark, indicating that short-term bullish momentum also remains intact on the Aussie dollar. So with that, today's short-term pivotal support level will be the former medium-term pullback resistance now turns into an important pullback support for today's intraday basis will be at 64 figure. So 64 figure will be my pivotal support for today. We will flip to a intraday bullish bias on the Aussie dollar. First resistance to watch will be 64.70. So 64.70 also confluence with the 200-day is the minor swing high of 10th of December last year. All right, over here 64.70, and so confluence with the 200-day moving average as well. So a breakout above 64.70 may see the next intermediate resistance zone coming in at 65.20/65.40 next. Only a push down and an hourly close below 64 figure pivotal support for today will invalidate today's intraday bullish bias and also put yesterday bullish breakout in jeopardy to see a choppy downward drift potentially to expose the next near-term support level at 63.35, which is the minor swing low of 16th of April and 17th of April. A breakdown below 63.35 may offer more weakness potentially to retest 62.80/62.50, which is the 50-day and the 20-day moving average, acting as similar support zone as well. All right, so i.e. in a nutshell, given its technical elements has starts to turn positive, we will flip to an intraday bullish bias on the Aussie dollar for today, as long as 64 pivotal support holds. So that's for the Aussie dollar. Lastly will be the dollar yen. So the dollar yen continue to inch downwards right now, and now is hitting very close to the last year's September low at 140.30/140 figure level. So this level here, if we go all the way down to September last year, right, this is the 16th of September 2024 swing low area. All right, so with that, what we could see is that technical elements continues to remains rather bullish as being expressed by the hourly RSI. So the hourly RSI continues to trend lower below the 50 level mark. There's no clear we call it bullish divergence as we are seeing right now. It's coming very close to the oversold region. So first resistance level to watch out for as we head into the European session will be yesterday's US session high and also today's Asia session high that is failed to have a breakout and a retest and a impulsive down move a sequence thereafter at the 14107 level. So with that, I'll be using a slightly tightened short-term pivotal resistance for today, which is using last Thursday minor swing low, now turns into a pullback resistance level at 14170. So as long as any minor bounce didn't surpass above 14170 short-term pivotal resistance level on the dollar yen for today, we will maintain its intraday bearish bias. The next level to watch out for on the support side will be at 139 figure / 138.70, which is a Fibo extension cluster level 1.382 taken from the high of 28th of March and one-time Fibo extension taken from the start of this ongoing medium-term downtrend since 10th of January 2025 medium-term swing high. All right, so let me push it back again. Okay, so unless we have a push up and hourly close above and a breakout above 14170 tighten short-term pivotal resistance for today, that would invalidate today's intraday trend bearish bias to kickstart another round of minor mean reversion rebound sequence, exposing the next near-term resistance level at 14210. Above 14210 may revisit the minor swing high area of 11th of April and 14th of April, acting as the next intermediate resistance at 14410. So in a nutshell, given that short-term intraday technical elements or short-term hourly momentum still remains bearish, we will still maintain our intraday trend bias on the bearish side for the dollar yen using a tightened short-term pivotal resistance for today at 14170. All right, so that sum up the intraday technical outlook on the major dollar pair. Let us now focus our attention to the major stock indices, starting with the Hong Kong 33 over here, representing the Hang Seng Index. So still no change and going to be congested below the 21,450 short-term pivotal resistance that we highlighted before the Easter break. So this level is still indeed a pivotal resistance level to watch to maintain the potential intraday trend bearish bias. First support level 20,840, a breakdown below 20,840 may open up scope to the next intermediate support level at 20,280 next. Only an hourly close and a push up above 21,450 short-term pivotal resistance on the Hong Kong 33 will invalidate today's potential intraday trend bearish bias to see a squeeze up to revisit 21,740. Above 21,740 may kickstart another potential recovery leg towards the next intermediate resistance zone at 22,220/500, will also correspond to the downward sloping 20-day moving average. So i.e. in a nutshell, still maintain that potential intraday trend bearish bias with using 21,450 as my short-term pivotal resistance. First support level to watch out on the Hong Kong 33 representing the Hang Seng Index will be at 20,840. All right, and the hourly RSI continues to shape a lower high, all right, representing a potential bearish momentum. With that, let us now turn our attention to the Japan 225. So the Japan 225 no change as it continues to trade inside this sideways range, short-term sideways range between the neutrality zone of 25,190 / 730 and the lower limit of the neutrality zone will be 33,440. So we'll still maintain this neutrality stance as it continues to trade within this neutrality zone for the Japan 225 representing the Nikkei 225. So remaining neutral trend neutrality stance bias for today between 35,190 / 730 on the upper limit. The lower limit of the neutrality range will be 33,440. A breakdown below 33,440 may trigger off a potential intraday trend bearish bias, exposing the next near-term support at 32,425 next. So that's for the Japan 225. Next up will be the Germany 30 representing the German DAX. So the German 30 and the German DAX gap down in today's Asia session. So no change, still using that 21,610 short-term pivotal resistance that we have since late last week, which also correspond very closely to this 20-day downward sloping moving average over here, 20-day moving average that is downward sloping, indicating that the higher level trend bias is still more on the bearish side rather than the bullish side, and the RSI continues to trend lower with a lower high, and is now the hourly RSI is now trading below the 50 level mark, indicating short-term bearish momentum. But given that it hasn't break below our first support level that we highlighted at 20,890, we do not want to tighten the short-term pivotal support level to be short-term pivotal resistance level be so tight. So the first resistance level to watch as we approach the European session thereafter will be the gap down in today's Asia session at 21,275. All right, so as long as the price didn't surpass above 21,610 short-term pivotal resistance that we have on the Germany 30, we will still maintain that intraday trend bearish bias. A breakdown below 20,890 may expose the next near-term support zone at 20,230/19,970, which also correspond to the 200-day moving average. However, a price action breakout and hourly close above 21,610 that would invalidate today's intraday trend bearish bias to kickstart a mean extension of that potential mean reversion rebound sequence, exposing the next near intermediate resistance at 22,240 that correspond to the 50-day moving average, acting as a similar resistance level as well. So i.e. To summarize, we'll still maintain that intraday bearish bias on the Germany 30 using 21,610 as my short-term pivotal resistance level, supported by a bearish momentum reading in the hourly RSI. First support level to watch on the Germany 30 as the European session open for today will be at 20,890. All right, so that's for the German 30. Onwards, next will be the major US stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So the Dow Jones Industrial Average continues to plunge lower as expected and hit our support level at 37,900 before staging a bounce during the last hour of the US session, and continues to extend its positive tonality in today's Asia session as well because of the RSI hitting the oversold level. But upon hitting the oversold level, the RSI didn't shape a bearish divergence and it continued to shape a lower low, all right, lower low in line with the price action. So without a bullish divergence, pardon me. So let me repeat. RSI hit oversold, but after hitting oversold, it didn't form a bullish divergence. It continues to trade lower low in line with the price action, okay, rather than a higher low. So without a bullish divergence on the hourly RSI, whatever bounce that we see right now is only a dead cat bounce. That means, i.e., after this bounce, the impulsive down move sequence may resume on the US Wall Street 30. So with that, I will use a rather tight short-term pivotal resistance level for today, which is the former minor swing low area of 11th of April. Before that, there is a minor bounce. So after this minor bounce, it plunges. So this should be an important inflection level for today. So this will be my Titan short-term pivotal resistance for today. At this 39,085,890. Sorry, let me put it in writing. 39,090. So 39,090 will be my Titan short-term pivotal we so-called resistance level for today. Okay, let me highlight it. This one delete. This one delete. Okay, let me adjust it. Everything put it nicely. 40,070. Okay, 39,610. Okay, let me put it. Okay, so given that it's already plunged by a fair bit, so I'll be using a Titan short-term pivotal resistance level for today on the US Wall Street 30. So this is an hourly chart over here. So potentially, as long as this bounce didn't surpass above this Titan short-term pivotal resistance that I have for today on the US Wall Street 30, which is 39,090, we'll still maintain that intraday trend potential trend bearish bias below 37,900 exposes the all-important swing low area of 7th of April and 9th of April. So this is doing the onslaught of that release of that higher level of reciprocal trade tariffs, and the bounce was doing the relief bounce. So whatever relief that was being seen by that so-called 90-day break in the higher level US reciprocal trade tariff, 80% of this gain has almost been wiped out. So very likely this bounce over here is like a counter trend rally within a medium-term downtrend that is still intact for the US Wall Street 30. So below 37,900 exposes this all-important critical swing low area of 7th of April and 9th of April at 36,790 / 36,400. Only an hourly close and a break up above the 39,090 Titan short-term pivotal resistance that we have for the US Wall Street 30 will negate today's intraday bearish bias to kickstart another round of choppy mean reversion corrective rebound sequence, exposing the next intermediate resistance level at 39,610, followed by 40,070, which is slightly below the downward sloping 20-day moving average. So i.e., in a nutshell, using a Titan short-term pivotal resistance for today at 39,090. So as long as 39,090 didn't surpass the upside, we will maintain that potential intraday trend bearish bias on the US Wall Street 30. All right, so lastly will be the Nasdaq 100. So the Nasdaq 100 also continues to trend downwards, break below 18,125 level, and right now it's attempting to actually hit our first support level at 17,410 over here. So now the RSI also continues to trend lower, hitting the oversold level over here, hitting an oversold level. But upon hitting the oversold level, there is no bullish divergence. Similar on the hourly RSI on the US Wall Street 30, indicating that whatever bounce that we may see right now is a dead cat bounce. So after this dead cat bounce, the potential so-called trend bias is more skewing towards the downside rather than the upside. So with that, I'll be using the first resistance level to watch, which is now coming very close at 18,125 level. So this will be my first resistance level to watch. So I will use just in case of any whipsaw over here, a slightly higher level, which is this level here. All right. So this level, if I will do a Fibo retracement of this entire sell-off that took shape recently from the high of 14th of April all the way up to yesterday's minor swing low, that will be the golden ratio of 61.8%. People golden ratio. So it's at 18,505. Okay, let me adjust it. 18,505. Okay, so this will be just a normal resistance level to watch. Next. Okay, so our as long as this bounce didn't surpass a slightly adjusted Titan 18,505 short-term pivotal resistance that I have for the Nasdaq 100 for today, we'll still maintain that intraday trend bearish bias. Potentially a breakdown below 17,410 exposes the all-important swing low area of 7th of April and 9th of April at 16,590 / 16,335. Only a push up and an hourly close above 18,505 may negate today's intraday trend bearish bias to see another round of choppy mean reversion rebound sequence taking shape, revisiting 18,820. Above it may see 19,070, 19,280 coming in, which is the minor so-called swing high area of 14th of April and 10th of April. So i.e., in a nutshell, still maintaining that potential intraday trend bearish bias on the Nasdaq 100 as long as this adjusted 18,505 short-term pivotal resistance is not surpassed to the upside. All right, so that sum up the intraday technical outlook on the major stock indices. So now let us focus our attention to the commodities market, starting with the gold XAU/USD. So for gold XAU/USD continues to surpass higher over here. What we could see is a very strong rally. All right, a very strong rally over here. So what we could see over here is that the next resistance level to watch will be a couple of Fibo extension level on the upside. So the upper limit of this ascending channel that is still in place since the low of 9th of April. Okay, so this first resistance zone has really been met now over here. Oops. Okay, let me do some adjustment for gold XAU/USD. Okay, so the next level to look out for will be at this 35,550. Okay, which is a cluster of Fibo extension level. Oops, sorry. 35,550. All right. 3,000. Okay, 3,550. Yeah, so 3550. 5, 5, 6. All right, over here. This will be the next resistance level to watch, which is the upper limit of this minor ascending channel as well. Above it, sees the next Fibo extension level coming in. Okay, at 3593. Right, 3593/3619. 3593. Okay, let me put everything in writing. /619. Okay. Okay, so this will no longer be a resistance. This one will be surpass. So we got to tighten our short-term pivotal support level. So given that this is a very strong push-up, hourly RSI also at overbought, but there's no bearish divergence. As you can see over here, continues to shape a higher high in line with price action. Yes, there may be a bit of minor pullback coming into play. So minor pullback, first support level to watch will be this former minor swing high of today's so-called today's yesterday's late US session minor swing high now turns into a pullback support at 34.36. So tighten short-term pivotal support level will be the lower limit of this minor ascending channel. Okay, at 34.06. Okay, which is all the congestion area that has taken shape at the start of the European session yesterday, and as well as the lowest point of yesterday's US session as well at 34,000 okay, 34.06. Okay, let me put it in writing over here. 34.06. All right. Okay, this is 34.06 at this juncture. Okay, now if this level is being so two support level to watch out for. So this, I will remove it, remove it, remove it. Let me tidy up the next level of support to watch. This will be 32.87. Followed by, oops, 3,351. Okay, great. So what we could see over here is that the bullish trend continues to accelerate. So we got to respect this trend. No bullish exhaustion, as well as the hourly RSI continues out the overbought, but there's no bearish divergence. Yes, there may be some form of minor pullback that could take shape over here. So this minor pullback over here may pull back towards the European session at 3,444. then with a range of this 3,436. So 3,444 slash 3,436. Short-term pivotal support slightly lower, which is at 3,406, which is the congestion area that's being formed since yesterday's European session, heading into the start of the middle part of the US session, and so correspond to the lower limit of this ongoing minor ascending channel that is still in place since the minor swing low of 9 April. So using a tightened short-term pivotal key support level for today at 3406 for gold XAU slash USD will maintain its intraday trend bullish bias potentially. Next resistance level to watch will be at 3550 slash 556 Fibo extension cluster, and also the upper limit of this ongoing minor ascending channel above 3556 may expose 3593 slash 619 next, which is also a Fibo extension level as well. Only an hourly close and a breakdown below tightened short-term pivotal support for today at 3406 will negate today's intraday trend bullish bias to potentially kickstart a minor mean reversion decline sequence, exposing the next near-term support level at 3351. Below it may see 3287 next, which is the minor swing low of 16th of April and 17th of April. I.e., in a nutshell, the ongoing bullish acceleration still remains intact potentially for gold XAU slash USD. So as long as today's tightened short-term pivotal support holds for gold at 3406, will maintain its intraday trend bullish bias. Right. Lastly, will be the West Texas crude oil. So the West Texas crude oil continues to inch down lower in yesterday's uh, 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 US session and hit our first support level at 62.39 before staging a minor bounce. So with that, the hourly RSI also inching downwards as well. So no conviction to actually flip to a intraday bullish bias for today on West Texas oil. So we will maintain our intraday trend bearish bias, still using 65.40 as my short-term pivotal resistance, which will confluence with the 20-day moving average, I think as a resistance level as well. A breakdown below 62.39 exposes the next near-term support level at 60.08. Below 60.08 may see 58.30 next. Only an hourly close above and a breakout above 65.40 short-term pivotal resistance level for today that would invalidate today's intraday trend bearish bias to potentially see an extension of that mean reversion rebound extending, exposing the next intermediate resistance at 68.05, which correspond to the downward sloping 50-day moving average. All right, so i.e. in a nutshell, still using 64.40 as my short-term pivotal resistance to maintain today's intraday trend bearish bias potentially. All right, so that sum up the intraday technical outlook on the broad-based cross asset classes. Just before we go, let's take a look at the economic calendar. What are the key data to look out for today, Tuesday, April the 22nd in the European session. So during the European session, will be rather quiet in terms of economic data release, no tier 1 data. So with the exception at 6:30 p.m., we have a ECB official not speaking at 6:30 p.m., something to take note of that may impact the euro dollar and the euro crosses movement. Then thereafter, we have the release of the IMF World Economic Outlook forecast. So this will be the updated global economic forecast released by IMF at 9 p.m. Singapore time, and there will be also a press conference by IMF officials as well. So this is rather important. Whether IMF do they downgrade global economic growth and as well as upgrade inflation forecast. So that could imply a stagflation risk environment that could impact almost all asset classes. So that report, that updated IMF World Economic Outlook report that will have the latest forecast on key global economic indicators. So that will be at 9 p.m. Singapore time today. Then thereafter at 9 p.m. you have US Federal Reserve official Jefferson speaking, 9:30 p.m. US Fed Harker speaking, and we have a tier 1 Eurozone economic data release, which is consumer confidence, preliminary reading for the month of April, out at 10 p.m. Singapore time. Market is expecting a further deterioration to negative 15.6 from negative 14.5 that was printed previously in the month of March. Then thereafter, at 1 a.m. Singapore time, we have another ECB official Gundos speaking over here. 2 a.m. Bank of England official Brandon is speaking. 2 a.m. another Federal Reserve official Fed Kagastri is speaking. Lastly, at 6 a.m. Singapore time, Fed Kugler is speaking. Then for those who are looking at the Aussie dollar, we have some tier 1 Aussie data, economic data to take note of before the start of tomorrow's daily dose. 7 a.m. Singapore time, Australia preliminary PMI data for the manufacturing and the services for the month of April. And for those who are looking at the dollar yen, the Nikkei 225 and the yen crosses, 8:30 a.m. Singapore time tomorrow will be the preliminary data for the manufacturing PMI and the services PMI for the month of April. And last but not least, you also have a key mega cap US stocks earning release, which is Tesla on Tuesday 22nd. So that is US time before the close after the close, pardon me, after the close of the US session. Sorry, I have a bad cough. So Tesla will report its earning after the close of today's US session. That means Singapore time early Wednesday at around 4:01 to 4:02 a.m. Singapore time. That means early morning Tuesday 4:01, early morning Wednesday Singapore time 22nd of April at 4:01 to 4:02 a.m. Right after the close of today's US session. That will be Tesla reporting. So why is it important? Because it's a mega cap stock within the S&P 500 and the Nasdaq 100 that could impact the sentiment during tomorrow's start of Asia session trading on these two major US stock indices. So that sum up today's daily dose of market insights. I'm Kelvin here signing off, wishing you all a great day ahead, and we shall speak again tomorrow. Thank you.